Greetings. I'm Deborah Schwartz. I'm Managing Director for Impact Investments at the John D. and Catherine T. MacArthur Foundation. And I'm just so glad to be here today with Keisha Cash of the Impact America Fund. In 2019, the MacArthur Foundation made an equity commitment to Impact America Fund 2 as part of our $500 million allocation to impact investing. So, Keisha, I'd love for you to introduce yourself. And then also, I'd love for you to talk about why you think about racial equity and racial inequity as America's greatest market inefficiency. I think that there are more and more corporate and political and financial leaders who are aware of the scale and depth of the racial wealth gap and the other economic disparities that Black Americans face. But I'd love for you to start by sharing why you see this as a market inefficiency and why investing in particular is such an important part of both the problem and the solution.
Absolutely. Thank you, Deborah. It's always great to share space with you. I have the privilege and the honor to have Deborah as a representative on my limited partnership advisory committee for Fund 2. So it's wonderful to be in community with you. Glad to be at this conference. I'm still thinking about the important and great points made on the diversity and equity panel that Martin and Yolanda and George and Colleen participated on. So I want to thank those panelists for that important conversation and the work that they're doing to advance racial equity. And I want to start out, Colleen, I won't butcher your last name, but I want to quote you in what you said in regards to the importance of us not forgetting about the past and the history while looking towards the future and where we're heading. And I think that's such an important point to make as we talk about racial equity, particularly in America. When we think about the events of 2020, that certainly was a tipping point. The murder of George Floyd in the public square, and we all saw that, and we need to acknowledge it for what it actually was a tipping point for the world to protest justice, fair justice, and treatment of Black lives in America. Prior to 2020, I've been out here beating this drum for quite some time with many who have been fighting for racial equity on various levels. And it's important to note that the gaps that we're talking about today start today. So when we think about the racial wealth gap in America, Black people have 6 cents for every dollar of white wealth. When we think about the racial income gap, I just read some great research from the McKinsey Black Institute, or Institute for Black Economic Mobility, that was actually started in 2020. But they have a figure in there that says annually, because of the racial wealth gap, Black people are missing out on $220 billion. And we can go down the line. We can talk about the education gap, and we can talk about the home ownership gap. And these are real gaps, and it leaves us in positions whereby if we don't address the systemic issues and the roots of these gaps, if we don't get better access to financial services for Black and Brown communities, if we don't think about skills training for Black and Brown communities, these gaps are going to widen, and it will continue to perpetuate these racial inequities. So it's, for me, Deborah, it's how do we address this? Racism is a big topic, and we can't forget about racism. But when we think about business matters, how do we address the systemic racial inequities that are unfortunately throughout our systems in America?
Thanks, Keisha. I guess, can we drill just like one level deeper, which is given the scale of the economic disparities and the impacts that you're talking about, and that, as I said, I think, unfortunately, but, in a way, it's a good thing. People are more and more aware of these problems, even though they continue to deepen, they continue to worsen, and they have for decades. How do you see investing fitting in? Because as you mentioned, there's education gaps, there's health gaps, there's employment gaps, skills gaps, there's huge gaps in intergenerational wealth transfer. But why investing? Why is that your point of focus?
Absolutely. And when you think about investing, there's clearly a spectrum. So again, those points made on the previous panel and what Yolanda mentioned in regards to how Wellington thinks about their diversity and the push on these corporations to make sure they're not just talking about it, but they're actually acting on it. So that's very important to make sure that there are diverse managers and capital. When we think about my work, particularly as an early stage venture investor, my interest in playing at the early stages, I believe there aren't enough quality solutions that have been designed and built to actually address racial inequity in the actual business model. So I appreciate and I applaud. I've had a chance to spend some time with Martin at Just Capital, and he's been beating on this drum and working with corporations for quite some time, and we need that work to happen. I also believe what we need is really from the ground up, how do we develop companies led by leaders with the cultural competency to design solutions, to design technologies, and to really integrate that from day one into their business practices. So I think capital, capital is powerful. Capital is certainly a tool. We're in this age where technology is also a tool. So if you have right intention and you're thoughtful about it, you can design products and services that do meet those needs. And I'd argue that those who are on the cutting edge of this movement to think about designing innovation in that way are the future. And we've heard that a few times as well as this conference. Like, that is the cutting edge. It will take some time, obviously, for these companies to grow up. But I believe that that's what's in demand, and that's what's being.
Do you want to share maybe a couple of examples of these businesses that have racial equity, as you said, built into the business model? Because I think that bringing that to life and sharing a few of the incredible businesses that you found and that you're investing in through Impact America would be so helpful to everyone.
Yeah, absolutely. So I'll start by saying the mission of Impact America Fund. So we are a early stage venture investment fund, and we are a proud impact investing fund, hence the name Impact America. And we are truly focused on investing in companies that we believe are designing solutions that are inclusive of low and moderate income people. And we fine point that to say inclusive of low and moderate income people and people of color. Which is important. And I think the intentionality to actually say it is important, so that we're acting on that. In our sectors, we look across some of the themes that we're investing in, and I will share one example. We look at financial inclusion, we look at skills training, we look at support services for small businesses, and we're starting to look at the green economy. And when I say we look at that, we look at opportunities whereby software and tech-enabled businesses are essentially disrupting archaic ways of being. They're disrupting these old archaic systems and offering up new innovations that are more inclusive, that are more fair and just for stakeholders, and that really value the community members as assets. And I think that's what's been missing from the equation. Folks have chased the Black and brown community as consumers, but have undervalued them as assets and undervalued them as stakeholders, having a real role to play in the development of these impact investments in our case. So one great example in our portfolio is a company that we're invested in. The name of that company is Care Academy. This company is a software compliance and training company for the home care agencies and their direct care workers. The company happens to be led by a Black woman who herself has spent time as a caregiver as well. She has a Harvard degree, master's in education from Harvard, right? And so has both that cultural lived experience to build a company that truly works for home care agencies and direct care workers. Company, great growth metrics from a traditional VC standpoint. A lot of folks interested in Care Academy and what they've done. They're serving 1,200 home care agencies. They've trained over 200,000 direct care workers, and they're moving into how do you create better quality care in the home by utilizing data. So very excited that we were a lead investor for that company. But more importantly than the, just as important, I'll say, I shouldn't say more important. I have one of my investors here. Just as important as the financial return expectation is the impact. We know in this country, there are over 4 million direct care workers. 60% of these workers are low-income women of color. And the pay is low as a direct care worker. The job is hard, and the industry rate is really high. And we're actually facing a huge shortage in this country of direct care workers. I think that we estimate in the next 5 years or so, we need an additional 7 million direct care workers to fill up the jobs that are needed. And so when we look at this company and the way that the founders built her business model, beyond being a great software company that has SaaS metrics and a great number of recurrent clients, she's intentionally centering the direct care worker as an asset and providing opportunities for that direct care worker to have ongoing training by allowing now the direct care workers on our platform through a partnership with the university. Their training on the Care Academy platform can transfer to credits for college classes, right? And so thinking above and beyond, how do I make a buck on an overlooked market? How do I make a buck on an overlooked market? By centering these key stakeholders and appreciating them as assets, and then making sure that to retain them, they get what they need in terms of education and economic mobility. And that's important to us. That's core to our thesis. How do we move the needle on economic mobility for the most marginalized communities in this country?
Thanks, Keisha, for sharing that example. And it is also just such a strong illustration of what I think you and your team call intrinsic impact. And I wonder if I might actually ask you to say a couple sentences about that. I also neglected to say that if folks have questions and they want to post them in the chat, and then we have a colleague from FT who will help get them to me and to Keisha. And we do have some time left in our session, and so we'll be happy to take those questions. But Keisha, do you want to talk about intrinsic impact for a second?
Yeah, and I love intrinsic. We call it inherent impact. It's pretty.
Post-holiday fuzziness.
As we would talk about inherent impact a lot at Impact America Fund, and what we mean by that is that the impact itself is so lockstep within the business model of the company that the impact, using the Care Academy example, the impact of ongoing training and education for caregivers is the way to increase caregiver retention for home care agencies, which need that desperately and pay Care Academy an annual fee for her education and training compliance software, right? And so it's this circular effect of if we can nail that inherent impact, having it tied to financial outcomes and financial metrics, and we can get that right, then it becomes a flywheel where impact drives the financial growth drives the impact. And I've said historically, and I probably shouldn't say this anymore, but I will because I'm here with Deborah. What we want is for that impact to be so inherent that as our companies get sold, and thankfully we've had a couple of exits to larger players, I think more corporations will buy or earlier stage companies that have this inherent impact baked into their business model. What we would want is as they get sold, as they take on strategic partners, that if that strategic partner or that buyer doesn't appreciate the stakeholders and that we do, that the model would essentially, wouldn't work, it'd fall apart, right? And so we're looking for that impact to be so baked into the business model that it is the key driver of the growth of that business.
And I think that's so important, Keisha, as we think about the larger impact investing field and concern that has arisen in lots of quarters around impact authenticity. And how do we know if everything that is now being positioned as an impact investment, how do we know if that's in fact what it's accomplishing? And what you're describing is kind of on the other end of the spectrum. This is not a label that's being attached to the Care Academy. It is both inherent and intrinsic in the model of that business. And I think that's what makes the portfolio of companies you've been investing in so promising. So I think we have a question to help spur what is possible and inspire companies. Can your investees, and I think, Keisha, this is a question for you, publish their EEO-1 forms to show how diverse the teams are and how others might aspire to be?
Yeah, I think that's a great question. What we publish internally for our LPs are diversity metrics, and it's a small group of us. So I think this goes back to we recently had an annual LP meeting, and we had 60 some odd folks that are our current LPs and potential LPs. And I think someone said it, I don't know if it was Cynthia from Kellogg, and she's like, we're preaching to the choir. We have to get our messages far and wide. And so we publish internally for our investors are diversity metrics on the portfolio, including the number of founders of color in our portfolio. We over-index. We're not exclusively investing in Black and brown founders. We over-index in investing in Black and brown founders because they're more culturally competent about the issues we care about. And then we drill down into the company level and we ask for data on how many women and people of color do our companies employ, how many women and people of color are on the boards of our companies. Now, granted, these are smaller startup companies, making their way, but I think it's an important question. The data demonstrating that as these companies grow and they're growing with this intrinsic inherent impact and diversity baked in from day one, it's very possible to do that and to show that it adds to the actual value of the company.
And I think that's the really key message, right, of the whole effort, which is to say these are not separate things that you're trying to force together. You're looking for those opportunities that have been overlooked because there is outsized potential for impact and for other kinds of return. I think with a couple of minutes.
Just quickly, Deborah, and what I miss saying, and one of the most important stats for us, because we don't stop at diversity at the level of the founder level or the board level. What we really care about is the diversity of the stakeholders. Who are we serving? Who are the Care Academy stakeholders? We have a company in our portfolio, Camino Financial, that's deploying over $100 million of very small business loan to Hispanic-owned businesses. Who are those business owners? What's the average revenue are those businesses? And are those businesses over time, what we'll track, are they better off from getting this capital access from Camino? So again, I appreciate that question. And I do think there's more work to do broadly available.
But just a reminder that it's, looking at this issue of inclusion and diversity at every level, at the level of the VC fund manager and the entrepreneur and the employees and the ultimate beneficiaries. Lots of layers to think about. So Keisha, before we wrap up, first, thank you. It's always inspiring to hear about the work that you're doing along with your great team at Impact America. I wondered if you have any final thoughts to share out with the audience in terms of maybe a call to action or advice as they go forward in their respective journeys toward greater inclusion, equity, and resilience in our world.
Yeah, we're hearing a lot. I don't want to repeat what I've heard. I'm really inspired by the speakers that I've listened to so far today. And the S, everyone talks about this S in ESG, and I'm glad that we're having conversations about the S, whether you call it social equity or social justice. Now is the time to pay attention to the S and to make sure that the uprisings from the streets and from all of us in 2020, the corporate commitments, the care that everybody took to make public statements. Let's not leave that as a moment. That this is a movement that has been happening prior to 2020, and I sincerely believe that all of us have a role to play in the movement. And for us, that's as a venture investor, and we're excited that T allows us to reach larger numbers of low and moderate income people if we're building and designing it with that intent. So it's just a real exciting time to merge these worlds of wokeness, to paraphrase George, who spoke earlier, and the tools that we have, capital and technology. So I just encourage everyone. Don't get tired. It's a movement. It's been happening for a while, and it's our turn to play our role in that movement.
Thank you, Keisha.